Hey, what's up everyone? Aubrey Trades here, and today I want to talk to you about one of my favorite day trading patterns and show you how you can find it and trade it for yourself. It's called the dip and rip. Let's get into it. Now, the dip and rip is a very popular trading pattern. It's showed up a lot this year, and it's pretty great. It offers a high risk-reward ratio, and when it's in favor, it can be really great and really reliable. I mean, in this example here, I got pulled up Marin Software from earlier this year, which went, in this here, clocked a high in almost the 10s, but then sold into the 850s, 840s over the first 30 minutes before spiking back up, reclaiming those highs and continuing up into the 18s, right? Now, that's all well and good, but how do you find this? How do you know what stocks these are going to be most effective on? Well, I'm going to talk to you about that right now, as well as show you a video example of one that happened this past week, okay? So move this over. Ideally, the best candidates are going to be a low float runner. Low float, meaning that it has a small amount of shares available to trade, ideally 10 million or less, give or take, right? That just means, think about supply and demand. If you have a stock that only has 10 million shares available to trade, but it's trading 30, 40, 50 million shares within those first 30 minutes of the day, that means it's completely going through its entire inventory of shares multiple times. That sort of action is what allows you to have these stocks that go from 4 to 20, right? Or from 10 to 15 within minutes, right? You want to find those, and you're going to find them on that top percent gainer scan. Ideally, they'll have some form of news and be in a hot sector. That's just like a sexy theme, right? Right now, it's NFTs or cryptos or EVs or metaverse. They change throughout the years, but there's always going to be a handful of sexy themes to look out for. I'll give you an example, and I'll show you how you can check on the float of a stock, all right? If you see something on the top percent gainers, looks like a good candidate, pull up your Safari, go to finviz.com, free website, free resource. We'll look at SOPA here. I already got pulled up. This was a runner this past week. You can see it went from the lows of the 3s, ran all the way up to over $20 within 1, 2, 3, 4 freaking days. Type in your ticker here, scroll down, right around here, you're going to see where it says shares float. Here, 11.26 million. Counts good enough for me, small float, yeah? Go over to Thinkorswim. I'll show you this example we're going to talk about right now. This is on Thursday. This was the last day of the move. You had this nice opening up near the highs, selling off. Ideally, these things happen 9:45 or later. This is picture perfect, almost to the T, 9:46 a.m. This thing clocked its low of the day, started to turn around, reclaim those highs, and then the range really opened up. I mean, our pre-market highs here were, honestly, it was here. It was 1780s. The previous day highs were about 18. Once you reclaim that range, this thing runs to 22, right? Now, this could have had legs to go further up, and there's a couple different ways you can play it, okay? You can wait and start to enter as it starts to turn around, right? Right around here. Risk low of day. Set your stop for the low of the day. You want to give it plenty of space to work, right? You can either do that. It's a little bit riskier because you're kind of being a little bit anticipatory, right? You're trying to get in front of the move. Or you can wait until it breaks those pre-market highs and really opens up. This is your safer play, higher odds, yeah. A little hard to risk low of the day from the 17s, right? Because now you got to risk $2 a share. But 18, 19, 20, 21, 22. That's $5 for $2 of risk. That's not ideal, but it's pretty good. And in this specific example, if we go over to the daily chart and we see this thing had room to run it to the 30s, right? In that context, that's great risk reward. You just got to know where to take your profits. And as you see it start to give up a little bit, like right around here when it clocks a lower high, you're looking to get out when it can't continue up. Or you're making sure that you pay yourself along the way. Yeah? I'll give you a couple other examples. When we talked about, we pretty much covered all of these. We'll go through them again real quick to summarize everything, right? The stock opens up near the highs but slams down. Opening up near the high, dips down, starts to turn around at 9:45 or later, noting that it can happen a little earlier, but we got to be careful, because if we're not careful, those first 15 minutes are volatile, right? If I tried to guess the bottom here, I would have gotten stopped out. If I tried to guess it here, I would have gotten stopped out. It's very, very important to be careful there. Yeah. If it's going to be earlier, if it's within these first 5 minutes, I'm buying because it's already cleared this range up here. Even though it's a little higher up, because it's earlier in the morning, I'm waiting for it to be a little bit more obvious, right? We talked about the two places to buy, either as it starts to turn around or as it breaks the morning high range. So as it starts to turn around or as it breaks the high range. And we talked about setting our stop loss for the low of the day. We'll go through a couple other examples. Here's Marin Software from earlier. Here is LGVN from recent. We had 20 minutes of a sell down before running up into the 30s, right? So even here, if you bought the break of these morning highs at 970 or something, it might feel like, I'm buying and it's already up so much, but it's kind of like, what does it matter if you're buying at 10 to risk 850 when the thing runs to 30? Yeah. Or ISIG here, where we had a nice 10-minute sell down, and then you can buy in the 1850s, 1860s to risk the low 18s if it means you're going to get a run up to $23, $23.70, right? I also have here a video from BFRI, which was recent. This was a nice recent runner that we had that gave us a prime dip and rip example, and is a perfect example of a low float stock. We'll type it into FinViz. We can see here shares float 3.6 million, and this was on this day right here. So it's gapping up. It's gapping up over these highs, previous highs of 10. So that means it's a prime candidate. And let's see what happens in the video. So we got this action pre-market. We had this gap up over those highs of 10, and we're kind of reclaiming those highs in the pre's here. We'll fast forward through some of the action. We see it starts to climb up, consolidate some, and then here's the open. Boom, we're opening up at 10. We're selling off. We're watching how it reacts to VWAP, right? We're watching how it reacts to VWAP. It reclaims on that 3rd minute. So we'll back that up a little bit and we'll just let it play through. We're watching it here. This is our 1 minute, and we got 10 minutes here. I always try to keep my eye on the 10 minute to make my decisions based off of, right? So I'm watching for this reclaim of VWAP and hold, and I'm watching for this to reclaim this range here. As it reclaims, I'm hitting my buy, and I'm sizing in for the low of the day here. Now, because we already have this nice consolidation structure, because the context of where we're at in the daily chart, I'm okay taking this. Of course, this is a simulated account. I did take this trade for real, but with not nearly as much money. And then here we have that pop. Finally, we get that pop over the opening range here. Boom. Approaching that pre-market high. And that's when. You can even wait till right about now. Now this is a little bit higher odds. You're getting in the 10s. You can scale in if you want. You know you got to risk that low a day, which is 950 about. You get this continued pop. Boom. This consolidation, which is why I talk about having a wider risk. Because here, now you have this little wedge pattern. You can see where I drew it as it was happening. Common consolidation structure to look out for. And then we pierce through it. Boom. 11, 12, new highs. And then here, you start to see the halt up. Boom. Once you get the halt up, the thing opens up and hits 1463. That's the power of the dip and rip. And what is risking 80 cents, $1, even $2 if you're going to get almost $5 out of the move, right? That's the beauty of the dip and rip. So anyway, that's all I got for you. I hope you got value out of this. If you did, consider hitting that like button. I mean, if you made it all the way to the end of this video, it means you probably liked it. So you might as well give it a little bit of a tap for me. It really helps out with the YouTube algorithm. Consider subscribing and let me know in the comments down below what other types of content you want to see from this channel. I'm Aubrey Trades. Thanks again for watching. I'll see you in the next video.